Welcome to the Daily Update, where I'll go over the action in the market for Thursday, November 9th, and then we'll see how things look for Friday, November 10th. We had a down day. We just cannot seem to get through the resistance level. It's that upward sloping trend line that I'll show you on a few different charts, but that's acting as real significant overhead resistance. We've come pretty far, pretty fast with the big up move that we saw last week. We've been sideways. A little bit of negative news came out, and the market used that as an excuse to take things lower. It wasn't massively negative, but again, we'll go through that in just a moment. Before I get started, I want to say a big heartfelt thank you to all veterans. I had a grandfather who served in World War I. My father served in World War II. I'm very grateful for the service and sacrifice that not only people make, but their entire families make, and that entire nations make. So happy Veterans Day. Usually the bond market is closed on Veterans Day where the stock market stays open. I believe that's how it works, but I couldn't find any scheduled changes for Friday's session because this year Veterans Day actually falls on Saturday. All right, let's go back and talk about what happened. First of all, at the open, we had a pretty flat open. It looked like, okay, here we go again. It's just going to be another yawner of a day. Prices chopped above and below the unchanged level. Not a lot of conviction going on. Then we ended up going down below the daily pivot at 43.78. As the day went on, prices rose back above the daily pivot and the unchanged level, and then we chopped sideways. And then some news hit the market that I'll go through, and that took prices back lower down to S1 at 43.65. Prices attempted to rebound and came up off of S1, but then fell down to S2 at 43.46, and then we closed down at S2. Now, these pivot levels were not very far apart because we've been going sideways a lot this week. So the fact that we went all the way down to S2, yeah, it's a big deal, but it's not massive because the spread between them is not very wide. So we were down 0.81% on below average volume. That's another thing that you can say is still happening right now. And the technicals were still positive in the short, intermediate, and long term. We're working off a little bit of this extreme positive condition. We're also possibly coming into some negative seasonality. That could take things a little bit lower before we switch back into a more positive seasonality phase. And it's about inflation, interest rates. It was about a bond market auction that happened on Thursday. And then Chairperson Powell was giving a speech where he pretty much said the same things he said before, but the market went up when he said these things a week ago. When he said them yesterday, it's like, okay, I think we're going to take things lower. So this was pretty much more like an excuse rather than any kind of a big catalyst. And we're still keeping an eye on what's going on in Israel. There was also some recent bombing that the U.S. did in Syria with Iran-backed targets there. Just wondering if that's going to escalate things as well. All right, some comments. There was a 30-year bond auction, and there was poor demand for this. There had been pretty good demand for 2-year, 5-year, and 10-year. I believe that's how it went out. But when they came to the 30-year bond auction, not a lot of people were really interested. This usually is not that big of a deal. It might affect the bond market more than anything else. But again, this was used as an excuse for things to go lower. And then Chairperson Powell came out, and he didn't say anything new, but his comments were just taken as negative, so we went lower. And the market was pretty much poised for that already. Oil did close up just a little bit at 75.59. Our list is a little bit shorter on a short-term basis with being extreme positive. We have the Stochc RSI, the Williams Percent R, and the stochastics. And we actually have one new addition on the intermediate term overbought indicator. The CMB composite, it's coming down, but it's still extreme. And then we have the rate of change going back 10 periods. The 5 period that I have been showing, that's off the list now. But now the 10 period is coming back on as more of these prices from last week when we were just massively moving higher, they're getting calculated into that indicator. And then we're still dealing with this scenario that possibly the economy is stronger than expected. Now we're kind of tipping back over to maybe the economy is weaker than expected. And so far that is turning out to be positive for the market. We want to keep an eye on that because once we go too far the other way, what is negative can actually turn negative for the market. There's not a lot of fear right now that the Fed is going to be raising interest rates. They may actually be done with that. I've been waiting for some news out of China concerning their economy, but it's not really getting reported that heavily. Watching Israel, watching oil prices, and then watching earnings as they are released. The dollar was up and interest rates were also up, and that put a pressure on stocks. The 10 to the 5 is still back to being inverted now, where the 10 to the 2 and the 10 to the 3 month remain inverted. Sentiment didn't change. We're still at 41. That's negative. We had been lower than that, and we were starting to show some improvement where it didn't move in Thursday's session. Our trend, nothing has really changed here. We're still positive. The green line's on top, even though it's coming down a little bit. The ADX is still below its moving average, suggesting that the trend is weakening, but we're still above 20, so we are in a trending environment. I'm keeping our bias right now at positive. You could switch that over to negative, but this is really just working off more of an extreme positive condition. So yeah, you could probably change that to negative, but I would still keep our momentum at positive. The economic reports that came out, the only one that we had were weekly jobless claims. They came in a little bit weaker than expected at 217,000. They had expected 220,000. Last time we did get 220,000. Continuing claims were up a little bit to 1.834 million. Last time it was at 1.812 million. And I have a couple of charts to show you that. Here are the weekly jobless claims where they came down, but we're watching the blue line, which is the 4-week moving average, and that's continuing to go up, suggesting that maybe a little bit of weakness is creeping into the employment situation. We're also seeing continuing claims continue to go up as well, and that could also suggest that there's some weakness coming into the employment arena. And then looking at it all together, where we are seeing in advance with the continuing claims, that's in blue. The red line are the initial claims, and then a week ago we had the unemployment rate, which is ticked up to 3.9%. We did go up a little bit with interest rates. We're at 4.63. That's still above the 4.02, which that usually produces a concern for company earnings. Here's the intraday chart. We were pretty much flat. We went a little bit up, then a little bit down, and we just chopped it around. We did go down below the daily pivot, but then we quickly came back up above that, went positive for a while. And then this is when the bond auction results were announced and Chairperson Powell was starting to talk. And so we really shot lower down to S1, tried to bounce up off of that, came all the way down here to S2 and ended up closing just a little bit above S2. Looking at growth versus value, we were negative with both, where value is outperforming just a little bit here. And we did see some weakness with our growth to value ratio. We've been watching what appears to be some improvement throughout the week. Well, with the down day, that did suffer a bit of a setback. And on an end-of-day basis, we're still showing a little bit of an improvement here with growth versus value for the S&P. It's coming right back up to its 50-day moving average. And we are seeing it with this other measurement of growth versus value, where it's starting to break out above these previous prices. So this is still suggesting that under the surface, from a growth to value ratio, things are still looking okay. Keeping an eye on the mid-cap growth to value ratio. This is also showing where we're hanging in there for right now. We're not really breaking out yet, but we are showing some improvement. And here's the condition of the trend. The green line is on top, although it's declining. The red line's turning up a little bit. So with the green line on top, we default to positive. The ADX, which is the black line here, it's below its moving average and declining. So that's a weakening trend, but both of them are still above 20. So we are still in a trending environment. With the short term, seeing pretty much that same thing. Below the moving average, green line on top, both above 20. Keeping an eye on the VIX, trying to figure out where we're at in this whole conglomeration of things. We did go up with the VIX because we had a down day. So maybe that's part of this little spike up that we're seeing. It could be this other little spike up down here. The Ulster Index, though, still continues to decline, and it's dropping further below its moving average. So that shows fear is decreasing. We did tick up a little bit with the line chart and the bar chart with the VIX, but we're still well below 20. We're also below the moving averages. Volatility did pick up with the VIX of the VIX, but we're still below the moving averages and showing a bit of an increase with the bar chart and the line chart. We're continuing to look like we might be rolling over with the VIX to VVIX ratio. This has been going up, but we are starting to come back down. That could be positive. And the VIX to the 3-month average of the VIX is also showing a little bit of rolling over here. It's really hard to see, but it is coming down. But in the bigger picture, it's still going up. The VIX to move ratio did tick up a little bit since we had a down day for stocks. This is the one-day chart, and I pointed this out in yesterday's video where even though the market was pretty comatose, we really spiked up with the equity put call ratio. Well, maybe they were starting to get a little fearful of this bond auction, or what Chairperson Powell would say, or just because we're ready for some kind of a pullback. But we really saw a lot of those hedging positions come off in Thursday's session. However, this is still driving our 5-period simple moving average back up. We're at this 0.8 area, which is the extreme reading that we often get. And we've been here before. It looks like we're starting to come down, then we go right back up. Longer term, we're still going up with the 253-period simple moving average of the equity put call ratio. It's trying to roll over, but it's not very pronounced yet. We did see a bit of a tick up with this fear chart and a bit of an increase in this other fear chart that we follow. We did get the latest reading of the American Association of Individual Investors. Now, this is a week old, and we were doing pretty good a week ago. So, yeah, they're going to turn more positive, but they're not giving us any kind of an extreme reading right now. The ratio between risk on and risk off, it took a bit of a hit again. It's been in a bigger decline here where it had been showing some improvement, but this is still a bit of a concern. The advanced decline line, we're looking at prices falling below the moving average based on price, and we're declining and already below the moving average based on volume. We're still hanging in there with the new highs, new lows. When we shot up right after the open, that registered a whole lot of new highs. So that's looking pretty good, and we're seeing a contraction of the new lows, even though it's more than what we were seeing earlier in the week. But our 5-period and our 10-period continue to go higher. We're dropping a little bit more negative with our advanced decline ratio. Both the blue line and the red line are starting to drop below zero. Accumulation distribution did turn down a little bit, but is still above an advancing moving average. The chicken money flow, this is actually turning negative. It might be hard to see, but it's just barely red over here on the side. That's something to be a little bit concerned about. And we're just a little bit below average with volume, even though it's probably the highest volume day that we've seen all week. The market is just really having a difficult time getting above this upward sloping trend line. And now we're coming back down, and we're so far hitting support at the 50-day moving average. And we're seeing volume dropping off, but it's still above average in the bigger picture. The force index is no longer extreme positive. It's above zero, so it's positive in that sense, but it is dropping down a bit. The Stochk RSI is falling a bit, but it's still extreme positive, as is the Williams %R. And our stochastic starting to roll over and being extreme positive in the short term, also extreme positive in the intermediate short term, and we're becoming more extreme in the long short term. And here's the rate of change going back 10 periods where we get above this level. Now, there's nothing necessarily magical about this. You can look at other times before when we had extreme readings, and then sometimes the market really reacted to that. Other times it just kind of paused for a little while before it got set to go in the same direction it was already going in. The standard deviation chart, we're still getting a pretty high reading, meaning that this is being calculated into the movement right now, this big move up that we saw. And so we're seeing stocks, or at least the S&P, moving pretty fast. The cumulative advanced decline line for the NYSE is showing some improvement. We came right back up to this moving average before starting to fall back down. Also seeing some weakness with our regular advanced decline line. And we're still working off of a death cross when we compare moving averages of the NYSE advanced decline line, a little different study that we look at, and it was down in Thursday's session. This is something that we want to keep an eye on. This gave us a good heads up. It started to go up before price started to go up. Well, now it's starting to go down, and has been going down for a few days now before we really saw Thursday's decline. Is that telling us something, or is this just some kind of a signal that'll eventually turn and go back up? The go, no-go system still remains positive with the light blue candles or bars here. The TTM squeeze is still showing some improvement on a momentum basis. The balance of power is still above the dashed line. That's positive. We're still going higher with the midpoint with our highest high, lowest low value. So that's still positive. We haven't really done a lot of damage, at least yet. The CMB composite is coming down, but still in an extreme positive reading. The 50-period moving average study, we came down just about to the simple moving average, and that's an important moving average. Will this end up providing support, or are we going to fall through that? Also keeping an eye on our 20-period double and triple exponential moving averages. When we look at this way that moving averages are calculated, this green line, which is the double exponential moving average, is also providing support. We're still in between the simple and exponential moving averages when we look at the 100-period moving average study, and we're trying to come back up here to the 100-period moving average study. Now we're coming back down. The longer we can stay above these other lines, the more improvement they will show. Ichimoku cloud, we're kind of inside the red cloud right now. Is that providing overhead resistance? The vortex continues to be positive. It switched yesterday, and so it's continuing to show some improvement. The ease of movement is also above zero and advancing. That's positive. The bullish percent index is just ticking ever so slightly higher. That positive open and then move up that we saw triggered some new point and figure buy signals, so that's still hanging in there positive. The summation index based on price and volume, it actually is turning down just a little bit at the zero line. Want to keep an eye on that. Sometimes volume is a leading indicator when we're looking at both of these together. The top portion and the bottom portion are completely different indicators. I just plot them on the same chart. The NYSE summation index based on price continues to advance and is pretty much flat based on volume. We've switched over to neutral with the Elder's Impulse system for the S&P. We're turning down just a little bit, but still above 50 with the RSI 14 as well as the RSI 9. On balance volume, ticked down a bit, but it's still above the advancing moving average. We saw a little bit more weakness with the 200-day moving average study as well as the 50-period moving average study. And we're coming back down here. We're not quite at this level yet. It's at about 43.25, where we closed at 43.47, so 18 points away or so. If we see more weakness here, will this end up providing support? And also looking at the 61.8% retracement level, we're at 43.13, so we're about, what is that, 15 points away, 25 points away. Yeah, I'm a math teacher, but we'll be watching this as support if we see more weakness. But on a momentum basis, we're still positive. The PMO is going up, both based on price and volume. We're actually coming down a little bit and no longer extreme with the PMOs that are rising. The buy signals are not quite extreme positive and flattening out. We're still seeing improvement with the PMOs that are above zero. We're flat with the NYSE bullish percent index, so not a lot of damage was done there. We are pretty much flat to slightly declining with the NASDAQ 100 bullish percent index, but we're still above 50. So that's still hanging into the positive side of things. On a momentum basis, our slope is still positive. The MACD is still positive, and all of our oscillators are now switching back over and remaining positive. Here is the standard deviations where we came down. We're right on the border between the +1 and +2 standard deviations area. Shaken oscillator did tick down a little bit, but is still above zero. The money flow is still continuing to go up and is above 50. That's positive. The ultimate oscillator, and as I pointed out yesterday, we don't get a lot of signals from this indicator, so that's kind of significant. We were extreme positive and starting to come down, but we're still above 50. The Copic curve is still looking more positive. The parabolic SAR continues to be positive, and we came right back up again here to this longer term trend line. That was the high for the day, and then we started to go down after that. We were down with the Dow, the transports, and the utilities, and the transports are continuing to underperform the Dow, and we're seeing a little bit of a tick up here with the ratio. That means the Dow is outperforming the transports, even though both were down. And this is showing more weakness. When we look at the ratio between the transports and the S&P 500, we want to see this going up. It's still going down. Now we're coming back down here to some previous lows. Is that going to matter with this ratio? The Zohorchak method still is one off of giving us a full-blown buy signal. And the Staples S&P 500 ratio, it did tick up a little bit, but overall it has been declining. That can give support to the S&P. The S&P to utilities ratio did tick up a little bit. Both were weak, but utilities were weaker. This often also gives support to the S&P. The 10-day average of the S&P 500 highs minus the lows, we're crossing back above 50. This is longer term, so it's not picking up the individual day movements. It's picking up more of the intermediate term trend. So this is still showing that things are getting a little bit better. And we're dropping now with our 19-day exponential moving average of the advanced decline ratio. We're a little bit below zero based on price as well as volume. That's slightly more negative. The micro caps were down, but have not set a new 52-week low, at least yet. The Heiken Ashi is giving us kind of a doji-looking candle here, since we opened and closed at just about the same spot, according to this. The Kegi is still positive, though, and the Renko is still positive, but the three-line break is showing a little bit more negative price action. So we're kind of getting a mixed picture there. The equal weight index continues to underperform the S&P. They were both down, but the red line is down below the open, high, low close of the S&P weighted index. And this, again, you can take it a couple of different ways. The ratio continues to go up when we compare the S&P with the equal weight. That just means the big stocks are really holding up better, if not actually outperforming. That could be positive if you're in those stocks. If you're in other stocks in the broader market, that could be negative. The Dow is still above its 50 and 200-day moving averages. So as long as we can stay above that, we might avoid seeing a death cross here. But we did break a little bit further down below this R1 level. The diamonds have switched from being positive. Now they are neutral. The NASDAQ 100. This was another area of potential concern. We closed above this previous all-time high, this red line that I have here. Now we closed down below it. That's the negative part. On the positive side, we're still above this R1 level, and we're still above the 50-day moving average. And we switched over to neutral for the Elder's Impulse system for the QQQs. The NASDAQ 100 on a momentum basis continues to be looking more positive. And the NASDAQ is still at this R1 level. It closed right on that, and it's still above its 50-day moving average. And we're right in between the 61.8% and the 50% retracement levels. Small caps, though, they pretty much have given back everything that they gave at least last Friday and then some, probably Friday and last Thursday. But they're coming right down to this pivot level now. So that's not good for the market when the small caps are weak. We're dropping down below 50 with the RSI. When we look at the Russell 2000 small cap index, we're working off of a death cross. We're starting to give back what a lot was gained. We're dropping below this support level again. That's not good. Momentum is still positive, but starting to roll over for the small caps. And the small caps have switched over to negative with the Elder's Impulse system. The mid caps are still right down at this pivot level and also had a down day, and have switched over to negative with the Elder's Impulse system. The FANG index, it gave a little bit back, but it's still above its 50-day moving average and still in a longer-term uptrend. We're still above this resistance level, this green trend line that I drew in here. We haven't breached that, at least yet, when we look at the FANG index. We're still above this longer-term trend line going back to 2009. That's still holding up for right now. When we look at the Qs to the S&P, we're pretty much flat, but we're above the moving average. We declined with discretionary to the S&P. Large cap growth is rolling over just a little bit compared to large cap value, but it has seen some recent strength. When we look at the growth to value ratios, the large caps, mid caps are doing okay. The small caps are pretty much right on their moving average. We're still seeing a bit of an improvement here with our longer term new highs, new lows study. It's still going up, but it's still below zero. We're still above zero with the indicator. That's helping to turn the 50-period moving average back up, but it's going to take a while for that to turn more positive. And then we did have this WAG NYSE breadth thrust. And probably after today's video, I'm just going to shove this into the weekly video because these are much longer term signals. But to see two of them within the same year is a very rare occurrence. And then when we look at the highs minus the lows and take a 5-period moving average for the broad market, we're still below zero here. The dollar was up and continues to be in an uptrend. The financial sector, even though it was down, it's still above the 50 and 200-day moving averages. And bond yields for the 10-year were up in Thursday's session. So for price, we were down. We came right down to the 50-day moving average. We're still looking okay as far as momentum, and we're dropping, but still above 50 with the RSI. The 10 to the 5 yield curve still has gone back to being inverted after it was turning back to being more normal. Here is Tom Bowley's research, where utilities tend to not do well in November, where industrials do. We're possibly in this negative seasonality right now, but here's the 10th. Maybe we're going to start coming into some more positive seasonality. So what's our outlook for Friday? And I explained this at the beginning. There's no holiday hours, which usually at least the bond market is closed or has a shortened day. We're dealing with earnings season, and that can set the tone for different areas of the market. We're watching what's going on in Israel. The technicals are positive, but we're below that resistance level, and we're possibly dealing with some negative seasonality. We will get consumer confidence as well as the Treasury budget. Not really big in and of themselves. The market may react over consumer confidence. And then keeping an eye on all the different geopolitical events. Here's the calendar, and then I'll have the new one for next week when I come out with Monday's daily video. Looking at the Stock Traders Almanac statistics, we're across the board. We are negative when it comes to the Dow. We're neutral when it comes to the S&P, and we're positive when it comes to the NASDAQ. So, hey, take your pick. Then we will be on the 8th trading day of the month, where we do see some positive action here during a pre-election year. And we also see something positive when we look at the solid green line. And then we're wondering, are we coming into this little downward move here during a pre-election year when the current president is going for re-election? And we're also wondering where we're at in this other seasonal pattern going back to 1990. And then when we go back to 1950, things tend to look a little better from here going forward, but it doesn't mean that it's a nonstop party. And then looking at the NASDAQ, wondering if we're coming into this time of right now where we do tend to see some weakness, also seeing that a bit with the S&P. And Bitcoin, still, it's doing pretty good. It's actually going up just a little bit here. Here's the chart. We got up to 38, and then we've been falling back, and we're currently in the 36.7 area. So our scenarios, not going with the downward. We're still just looking too positive, but we are below resistance, and we're possibly dealing with negative seasonality. We're still going with the up one. That's what our charts will suggest, even though we might be dealing with some negativity. But hey, looking at the Stock Traders Almanac, anything is possible. We're not going with the sideways trend for right now, because even though the ADX is weakening, they are both still above 20 in the short term and intermediate term. The warning signs, the daily special K chart is still negative, as is the weekly chart. The 253 period equity put call ratio is still going up. The 5 period is back to going up and actually getting extreme again. The risk on posture is still showing some weakness, even after it had been showing a little bit of an improvement. Our new highs, new lows study is still negative, but it's trying to tick back up, but it's going to take a while for that to change. The Russell, the small caps, and the mid caps are working off of recent death crosses. The financial sector, it's right on top of its 50 and 200-day moving averages. Is it going to break to the upside or break to the downside? The positive signs, we do have another ZWAG NYSE Brett thrust. I'm going to switch this over to the long-term slide after today, because, again, this is on here for a long time. On a momentum basis, we're still positive for the S&P and the NASDAQ 100. The parabolic SAR chart is positive. The vortex is positive. The bullish percent index still registered a gain and is above 30, and that's a pretty significant buy signal, and it continues to show some improvement. The small and mid-cap growth, it's chopping sideways. I showed you the mid-cap growth chart. That is positive and holding up, where the small caps are pretty much chopping sideways. So our conclusion, we're positive, but we're below that resistance level, and we're wondering, is this negative seasonality going to continue? In the short term, we're still slightly overbought, but we're still below that resistance level. Intermediate term, we're also still below resistance and slightly overbought, but we're still positive in the long term. Thank you. I really hope you found this helpful. I hope you have a really good day, and I will talk to you in the next video.